Good morning. My name is Chris Kenny. I'm a partner at Kenny & Sams, and then with my partner, Drew Colby.
Good morning.
We're delighted to be with you this morning for one of our construction risk series. I want to tell you a little bit about our law firm first. Kenny & Sams is a boutique litigation law firm with specialized expertise in construction and real estate litigation. Today we're going to talk about some risk management tips that contractors, developers, and owners can use to minimize their risk. Drew?
Sure, thanks. So today's installment of the construction risk series is going to focus on insurance issues. It's really important to understand that these aren't theoretical or conceptual issues. These are issues that come up all the time. In the last couple of weeks, I got 3 calls on insurance issues. One of them dealt with a property equipment that was damaged on a job site. Another was a flood in a basement. Another was a plumbing issue, a plumbing code issue. And in each one of those matters, the question was, is there coverage? And if there is, whose policy applies to that? And how do we go about divvying up what's covered and what isn't covered? The bottom line is, when we're talking insurance, although insurance can sometimes not be the most interesting topic in the world, it is really important. It has real life implications. So that's what we're going to cover today. We do these every month, the third Thursday of every month, and we come up with topics. But if you have a topic of particular interest, please let us know what it is, and we'll maybe jump that up on our schedule, depending on the market interest for it. So we're going to jump out. Chris is going to generally talk about insurance in particular, and then we're going to jump into a little bit more detail about exclusions and exceptions to exclusions and some of those other things that are very important.
As Drew said, sometimes people think that insurance isn't interesting. It's fascinating if you think about it, because it is the backbone of your risk safety net. I'm going to provide a basic 101 on commercial general liability insurance as it applies to construction operations. And please think of it as a practical matter rather than a legal matter. A commercial general liability insurance policy is simply a contract. It's often known as lawsuit insurance. And that's because it has 2 basic parts: defense and indemnity. I'm going to tell you more about what that includes, but it's also important to know what the limits are on a policy. Commercial general liability insurance policies are written on what's called a per occurrence basis. The occurrence is the thing that goes wrong, the property damage or the personal injury or fatal accident on the job site. You want to make sure you check your limits to see what your per occurrence limit is. How much do I have for this particular claim? Often it's written on a per occurrence basis, like for 1 million per occurrence, 2 million aggregate. What that means is that for this one particular accident, this occurrence, you have up to $1 million on the policy. But that for that policy year, you have a higher aggregate limit because you may have more than one occurrence. It's important to track that, for example, because if you have, say, 3 claims during the course of the year, one that settles for $100,000 and 2 that settle for combined $900,000, you've then used your full $1 million for the year. If you have a $1 million aggregate, then you're done. The next claim that comes up in that same year won't have coverage. So make sure you pay attention to the limits on your policy. As I said, it's a contract. It has mutual promises. The contractor, as the policyholder who purchases the policy and gets the coverage, makes 3 basic promises. First, of course, they promise to pay the premium. You've got to pay the premium to the insurer. The policy is essentially legalized gambling. The insurance company accepts the premium, betting that there won't be a loss that will eat up the whole premium and have them suffer a net loss. That's why insurance companies will work with contractors on limiting insurance and transferring risks, some of which we're going to talk about today. So you've got to pay the premium. The next promise for the policyholder is to give prompt notice. If something goes wrong, the insurance company's got to know about it, so they get involved. Part of what the policy provides is the right to investigation. So the company will hire you investigators, OSHA experts, get people up to take photographs and statements, but they can only do that if they get prompt notice of the occurrence that went wrong with your business. So that's a policy condition. And you also, of course, have the duty to cooperate with the insurer. If there's going to be a claim arising from an occurrence, that might involve depositions, interrogatories, and other things that are part of a lawsuit. The contractor has to fully cooperate so that the insurer can defend it. And last promise by the policyholder is not to make any voluntary payments. In other words, if you get sued as a contractor, you have your coverage, but the insurer has the right to run the show. You can't make some side deal with the party suing you saying, I have $1 million in insurance, will make a payment. If you do, you could void your coverage. That is for the insurer to decide. Now, what is the insurer promising to the policyholder in this contract? It has the right and duty to defend you. So it will hire a lawyer for you, and it will pay for the cost of depositions, expert witnesses, and the like, and that's called a supplemental payment. In other words, that doesn't draw down on the policy limits we talked about before. The defense and all the things that go with providing a defense are supplemental payments. The insurer also then has a duty to settle a claim within the policy limit if liability is reasonably clear, and that again is designed to protect the policyholder. How do insurers respond when they get notice from a contractor there's been a lawsuit? They basically can do one of three things. They could accept coverage saying, thank you for providing the prompt notice. We received it, we'll hire you a lawyer, we're accepting coverage. Okay, so we're in this together. No conflict of interest. The opposite could occur. They could respond saying, we deny coverage. This type of claim simply isn't covered by the policy for a variety of reasons. It falls into an exclusion. Sometimes there's a hybrid response. It's not quite accepting, it's not quite denying. It's called providing a defense subject to a reservation of rights. In other words, the insurer says to the contractor, I'll hire you a lawyer and we'll defend you against this lawsuit, but we're reserving our right to withdraw coverage if during the course of the lawsuit we find out there's no basis for coverage. And defending on the reservation of rights is important, so if you're a contractor who gets a reservation of rights letter, you should seek counsel on it. It's a consumer protection issue. Because the insurers have reserved rights, there's essentially a conflict between the contractor and the insurer, and the law says that the insurer thereby waives the right to select the lawyer. The contractor gets to select the lawyer, and the insurer still has to pay for that defense. And likewise, the insurer forfeits the right to manage the lawsuit. Normally, if they're accepting and without any reservation, they get to call the shots on whether you settle, whether you go to trial, who the experts are, etc. But if they reserve their rights, that right goes to the contractor. Two key cases on that are the Magoon case, M-A-G-O-U-N, and Three Sons, Inc. versus Phoenix Insurance, which essentially set forth that forfeiture. What does commercial general liability insurance cover for a contractor? Essentially, claims alleging negligence that result in bodily injury, property damage, or personal injury. What does that mean? Well, as I said, it has to arise from negligence. It has to have been an accident. There is no coverage for an intentional act. There's an old saying that there's no insurance coverage against a punch in the nose, for example. It has to be something that happened by accident. And that accident has to have resulted in one of these three things: the bodily injury, the property damage, or the personal injury. Now, bodily injury, of course, could result in the ultimate bodily injury, which is death. Property damage speaks for itself. And personal injury is a little bit of a different animal. It includes things like defamation. There may be coverage there if there's a claim arising from a defamation. So that's the basic grant of coverage you get from your CGL policy. There are some exclusions to that, and those are things you really have to pay attention to. For example, as I said, intentional acts exclusion, no coverage there. If it arises from an occurrence that is covered by other types of insurance, your CGL policy won't cover it. What are some examples of that? Well, an automobile accident on the job site. That's going to be covered by a separate commercial auto insurance policy that the contractor should have. So it won't fall under your CGL policy. Or an injury to one of your own employees. That will be covered by a workers' compensation insurance policy, not the CGL. And an occurrence arising from something outside of your standard operations as a contractor. For example, a professional liability claim for defective design. That would be covered for an architect or an engineer under a separate professional liability insurance policy. So look for those exclusions. And last, if there is an exclusion, see if there's an exception to that exclusion. Drew's going to talk a little bit about the classic example on the construction site where the contractor gets sued by, say, the owner and asks for coverage, and the insurance company says, no, that claim alleges that you did defective workmanship, and that is under the your work exclusion in the policy. We don't cover just doing the job wrong. It has to have resulted in some type of bodily injury, property damage, or personal injury. But there's some exceptions to that, including the rip and tear exception, which Drew's going to talk about later.
Great, thank you, Chris. So everybody knows the golden rule on any construction project is to make sure that there's insurance, right? So everybody understands there's got to be insurance. Everybody forwards the certificates of insurance. But it's really important to make sure that if you're a recipient of a certificate of insurance, that it's actually legitimate. I've had one case not that long ago where I got a certificate of insurance, and the carrier was listed as a Disney character. I don't know whether it's Goofy or Donald Duck, I don't know, and I guess at the end of the day it really doesn't matter. But there was a loss on that project, and I looked at the certificate of insurance, and I looked up at the client, I said, you realize this is from a Disney character or insurance company. And as it turned out, there really wasn't insurance. Somebody just made a bogus certificate of insurance and submitted it because they didn't have insurance. So if you're dealing with somebody you haven't dealt with before and you get a certificate of insurance, it might be worthwhile to call and verify that that policy actually exists. Particularly with somebody you never dealt with before on a risky project, etc. Getting the certificate of insurance isn't necessarily enough in all circumstances.
Drew, if I could just jump in on that, that's absolutely true. The certificate of insurance often comes on a form called an accord form. And if you look in the upper right-hand corner of the accord form, there's a box that says, this is offered for informational purposes only. It confers no rights on the policyholder or the certificate holder. So be careful. You're much better off getting what's known as the declarations page of the actual policy that you want to make sure is in place. That's part of the policy and is issued by the insurer rather than the insurance agent, far more reliable.
Yeah. So construction sites present unique risks, and that's why insurance has such a big play in the construction world. First of all, there's risks on job sites. I mean, job sites are dangerous. There's moving equipment. There's machinery. There's a lot of things going on, and there's a lot of coordination that's involved in a lot of different trades who might or might not have worked with each other in the past. But there's also a risk that's associated in construction projects through these things called flow-down clauses. For example, if I'm a subcontractor on a job site, I'll have a subcontract agreement that says this subcontract agreement governs our relationships 100%, unless there's something different in the prime contract, and then you own those obligations in the prime contract, and then there'll be another clause that says, well, whatever the obligations are in any of these contract documents that imposes the greatest burden on you, that's the one that applies. So these flow-down clauses are a portal to risk particularly to a subcontractor on a project. So it's really important to have your insurance lined up and to be an additional insured on a primary non-contributory basis, which Chris will talk about. But it's also important to have an indemnification clause. I negotiated a contract yesterday, about a $16 million contract, that had a flow-down clause in it. And I'm looking at this thing and saying, okay, I understand what the risks are in this subcontract I'm looking at, but I don't know what those risks are. And those risks could pertain to, for example, claims. If I make a claim because of a changed condition at the job site. In my contract, the subcontract, we would get an equitable extension of time and an equitable cost adjustment. But that might not be the case in the prime contract. The prime contract might only have an extension of time. So we've created this portal with this flow-down clause that makes it vitally important to make sure that you have your insurance in place, particularly with your subcontractors, but also an indemnification clause. An indemnification clause is a risk sharing, a risk appropriation tool. It says if I get hit, then you get hit. And that clause can say, I get hit, you get 100% of what I get hit for, or it could say you get hit for the percentage that you caused me to get hit. There are different variations in what an indemnification clause can and will do. But the bottom line is make sure, because construction sites are so risky, that you not only have your insurance lined up, but you have an indemnification in the event that the insurance fails to accomplish its essential purpose. Now you have an indemnification clause you can turn to lower the risk factor that's associated with a particular project. So really important to understand that there is typically a flow-down clause in your contract, particularly if you're a sub, and you have to manage that with both knowing what your insurance obligations are and to cover it with an indemnity clause.
Drew's absolutely correct. Indemnification is one of the great food chain issues on a construction project. When I say food chain, think of a totem pole with the owner being at the top, and then the general contractor, and then subcontractor and subcontractor. That's the flow down that Drew talked about. And indemnity is one of those flow down issues that really has the last man standing, getting stuck with the burden often. To guard against that, the legislature has passed a special anti-indemnity statute applicable to construction projects. It's Chapter 149, Section 29C. And what that says is that an indemnification provision in a construction subcontract that purports to require a subcontractor to indemnify anyone, the general contractor, the owner, for liability not caused by that subcontractor is void. It's against public policy. That's to guard against this flow down that essentially has the people with superior bargaining power and perhaps money because they have the project, they get the general contract, from pushing all of this liability down unless it goes to the party that actually caused the problem. So 149.29c is an important thing for you to know whether you're the general contractor or the subcontractor. When we advise general contractors in drafting these indemnity clauses, it's really important to make sure that as written, it's enforceable. The language gets scrutinized heavily by the courts, and if it overreaches, as written, it'll be deemed invalid. What I mean by that is the court will actually look at the language the general contractor used in the subcontract to see if the provision as written violates the statute. Even if as applied in the factual circumstances of the case, it wouldn't violate because the subcontractor actually did cause the loss. That can happen sometimes. The subcontractor could be responsible for having caused the occurrence that gives rise to the indemnity clause, but the general may not get indemnification because the provision in their contract violates the statute. So again, make sure that you're working with your lawyers and your insurance personnel to make sure that the language in the contract passes muster. One way to do that is to have this what's called savings language. Every indemnification provision in Massachusetts in the construction contract should start with the introductory clause, to the fullest extent permitted by law, comma, and then you can almost say anything about indemnity, and that introductory clause will save it from having violated the statute. Essentially, the court will say it rewrites it so it complies with 149.29c. And Drew's absolutely right. The indemnity claims really can drive the outcome of a lawsuit. Because when people are in a lawsuit and they're saying who's going to ultimately pay this, the indemnity obligation will often direct that. So please pay close attention to that. If you're the subcontractor and you're being asked to sign an indemnification obligation, make sure that make sure that it doesn't overreach, that you're not being asked to indemnify them for things you didn't cause. And also make sure that it's covered by your policy. Check with your insurance agent and your insurance policy to make sure that there's coverage for that indemnification obligation you're assuming.
Right, because you in an ideal world you won't be exposed to a risk through an indemnity clause that isn't covered by insurance. So let me talk a little bit about the insurance policy itself. An insurance policy is the world of double negatives. And by that it means first of all they give you coverage, and then they exclude from that coverage certain things, and then there's exceptions to the exclusions. So when I say it's the world of double negatives, it's like saying I'm not hungry, right? That's how insurance is written. You get coverage, then there's exclusions to it, and then there's sometimes exceptions to the exclusions. Let me give you an example. To trigger coverage under a policy, and this is at a very elementary level, you need property damage to which the insured is exposed. So you need property damage. That's a term of art, it's defined, but for our purposes, let's assume there's property damage. You also need, as Chris said, an occurrence. So you need property damage in an occurrence. And like Chris says, a punch in the nose isn't an occurrence. No, it's an occurrence, all right, particularly for the person getting hit.
Yeah.
But it's not an occurrence that's covered by an insurance policy. The one that we get all the time is the exclusion to this coverage. So now we're on a job site. Yeah, we got the property damage. Yep, the insured is exposed to this. Yes, it was an occurrence. It was an accident. Something happened. Okay, we should have coverage. Not necessarily. Now we jump into the exclusions. And this is the one on the construction site that causes the most angst among contractors and others on the project. It's the your work exception to the coverage that you would otherwise get. And I'll just give you, this is kind of the language that's in some of these policies. This insurance does not apply to property damage to work performed by or on your behalf, more or less. That is your work. So what does this mean, your work? And what is excluded and what isn't excluded from that? Let me give you an example. There's a case out there where a contractor built a foundation. He was done with a foundation, and somebody built a home upon the foundation. The foundation was defective, it sank, for some reason, settlement, either compaction issue, whatever it was. the foundation failed and the house failed. The insurance covered the cost of the house because the house was damaged by the insured's work, but would not cover the foundation itself. So the insurance was limited to the house, not fixing that foundation, because the foundation was the insured's work. Right? So insurance isn't a bond. It doesn't cover your work. That's what a performance bond does. Insurance covers more or less the resulting damage from your work or consequential damage from your work. But it does not cover your work. It is not a bond. So there is this thing out there called your work, and I know Chris's experience is very similar to mine. That's when we get all our calls that, geez, I got insurance, it's here, and there was an occurrence, there was, I'm exposed, I don't have coverage for this. This is the most expensive part of it. The resulting consequential damage was inconsequential. What I need is that, because that's my exposure. But if it's their work, they can be in trouble for that, and they might not have coverage for it. Now I talked about the coverage, I talked about the exclusions, and now we got to talk very briefly about an exception. And this is a very important exception to the your work exclusion, and that is if it's work performed by your subcontractor. Sometimes it's subcontractor exclusion to the your work exception. So in other words, if it was done by the subcontractor, in some insurance policies that's not considered to be work of the contractor, therefore it is not your work and it's covered. So what you need to do is you need to talk to your insurance agent and see, to what extent, if any, is your work covered by insurance. And the answer is probably not much, if at all. And the other issue is, do we have the subcontractor exception to the your work exclusion in the insurance policy? So you need to have an open dialogue with your insurance agent to say, do I have the subcontractor exception? Is it available in the marketplace for me to procure? Because that's where my risk comes in. Particularly as a general contractor, most of your work isn't self-performed, most of it's subcontracted out. So if you get the subcontractor exclusion to the your work exception, it gives you a fighting chance to get insurance for a particular loss that might involve what otherwise would be considered to be your work. And even if you don't have this your work exception, sometimes you can pick up insurance. Sometimes you can pick up insurance through the subcontractor's policy. There's a recent case that came down in 2019 that dealt with a floor surface. The subcontractor installed a slab. Another subcontractor installed a vapor barrier over the slab, and another subcontractor installed a floor surface over the vapor barrier, whether it was carpet or tile, it doesn't really matter. What happened was, after the subcontractor poured the slab, and after the next subcontractor put a vapor barrier down, the slab subcontractor went back to the site and performed work. I don't know what the nature of the work is, the case doesn't describe it. I'm guessing, because he damaged the vapor barrier, that's the bottom line of this, that there was probably a high point in the concrete and he had to get down and grind it out. Or maybe there's a low point, they had to cut out some of the vapor barrier and repair it. In any event, what happened was they didn't make that seal. The vapor barrier didn't make the seal, and everybody knows a concrete slab expresses moisture. Moisture went up and cupped the floor. It did damage to the underlying matters. The first court looked at it and said, the slab, the vapor barrier, the floor surface, they're all kind of an integrated system, therefore it's your work. But the appeals court in Massachusetts came back and said, no, they're actually separate. They might be integrated at the end of the day, but they're actually separate. And because the subcontractor damaged somebody else's work, there was coverage for this particular loss. So you could sometimes get through your coverage through a subcontractor's coverage, and that's why you need to be an additional insured on a primary non-contributory basis. But also you need to have this indemnity clause that even if there isn't insurance, you get an indemnity right against this particular subcontractor. That's why the risks on a construction site always need to be addressed in at least two ways, three. One, everybody's going to be safe on a job site. That's OSHA, that's the CMR, etc. But secondly, you need to have really good insurance in place. And third, you need to have a really good indemnity. Now, really good is depending on where you are on the scheme of that indemnification provision. Are you being the recipient or are you being the giver of risk? But nonetheless, you need to manage those indemnities to reflect an acceptable risk-reward basis for your work on a particular project.
As Drew said, the exclusion for your work is something we come across all the time. And please, as two takeaways, just remember two exceptions to the your work exclusion are of note. As Drew mentioned, one of them is rip and tear. If you have to take apart some of the completed work to repair the defective work, then you may be ripping and tearing. That'll constitute the property damage you need to get coverage. So, for example, if the interior wall was framed improperly, your work was defective in that respect, but it wasn't noticed until after you put the sheetrock up and you painted it. To go back in and fix the defective framing, you have to rip and tear out some of the other work. That may constitute property damage to give you coverage as an exception to your work exclusion. Likewise, Drew mentioned that oftentimes the sub will delegate some of this work to a subcontractor. And if the general then gets sued and the insurer says, well, that's your work, the easy answer is, it's not my work, it was a subcontractor's work. That may be an exception to the your work exclusion. So those are two good takeaways. And last, I want to wrap up with a segue from our talk about indemnification. As I mentioned, the legislature scrutinizes indemnification provisions in construction subcontracts to protect subcontractors from, the alpha predators above it, the owners and the general contractors. And that is a well-established body of law in Massachusetts. That statute, as I said, is 149-29C. Here's the rub. You can get around that by requiring the subcontractor to list you as an additional insured on the subcontractor's own CGL policy. We were involved in a case at the State Supreme Judicial Court called Morrison versus Crown and Forster, in which the SJC determined whether or not additional insured provisions in subcontracts were governed by that same anti-indemnity statute, 149-29C. And we pointed out that the legislative history of 149-29C began with a draft saying that any indemnification provisions or obligations to insure a general contractor should be included and invalidated. During the course of the legislative history, the legislature took out the reference to additional insured status. So the statute as written only invalidates indemnification obligations that are overreaching. It does not apply to additional insured obligations. What does this mean? If the general contractor gets sued and can legitimately look to the subcontractor, and the subcontractor says, oh, your provision violates 149-29C, the general then just says, okay, let's go down to the next page of the subcontract where you promised to list me as an additional insured on your policy. That's not governed by 149-29C. What it does is it gives the general contractor an additional bundle of insurance. If the general is an additional insured on the sub's policy, what it means is the subcontractor paid for that policy. The general paid none of the premium, and yet gets the benefit of the sub's policy as an additional insured on it. Make sure that you check with your insurance folks and your lawyers when you're setting up these subcontracts, because to have your additional insured status, you want to make sure that the subcontract document, the general's CGL policy, and the sub CGL policy all fit together harmoniously. You need to look at both policies, what are called other insured provisions. They should say in the subs policy that this policy is primary for the subcontractor, but is excess to anyone who's an additional insured in this policy. The general's policy should then say this policy is primary, but excess to any policy on which the general has coverage. And another way of looking at this under the other insured clauses is if they both say this policy is pro rata with any other insurance you have. Let's see how that would play out. If the general has $1 million policy and the sub has $1 million policy, and the general is an additional insured, but the other insured provisions both say pro rata, it just means that these two $1 million policies share equally up to $1 million. So the general is not doubling his coverage unless he makes sure that the other insured provisions say, as Drew said, general is covered as an additional insured on a non-contributing basis. All right? So that the subs policy should say that this policy is primary and non-contributing by the general's policy.
Yeah, just in closing, the purpose of this presentation isn't to make you an insurance expert. You know that. We certainly couldn't do that in a half an hour. What we really want to do is have you have the information you need to have a very open and honest dialogue with your insurance agent about what kind of coverage you have. And the questions you should ask your insurance agent is, what is this your work exception? Do I have a subcontractor exception to the your work exclusion, etc.? What is this rip and tear thing? Am I protected? Are these implements in my policy? And if not, how do I get them? Because that's what I need to be as safe as I can be from an insurance standpoint on a particular project. Again, we do these presentations the third Thursday of every month, and look forward to working with you next month. And thank you very much for attending today.
Have a great day. Thank you.